Interest only. So interest only, very popular feature we can basically add on to most of those non-QM options. Not all, but most. So when you see me do the demo, we don't really have the interest only feature that we want to do live on the demo. There are a little bit of ins and outs and how those programs work. Some of them only allow limits to LTV to add that feature. Some of them allow limits to credit to add that feature. But it's generally available for most of our non-QM programs. So Jose, if you're ready, let's go ahead and check out some of our detailed programs here.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Great options for you today with our interest only products. The interest only product is available in a 30-year amortization and a 40-year amortization. Now, many reasons why you would choose an interest only option. You're looking at basically having better cash flow. We have many cases where they let us actually qualify with the interest only payment. So if you're trying to help your cash flow, definitely this would be a way to go. Sorry if you're having a little bit of delay, but system's a little slow today. So let me go ahead and share all the options for you, and I'll explain it along the way. All right, so our first option here is our primary full doc. Now, these are all non QM options that I'm sharing with you today. So, the maximum LTV on all our non QM loans, as always, is 90% and never any mortgage insurance applicable. So, here, first option I'm sharing with you is the interest only 30-year amortization. Now, this is a critical point when you're going over the interest only options with your borrower, depending obviously how long they're planning on keeping this loan. Reason being, the 30-year amortization interest only option obviously is interest only for the first 10 years. And then after the 10-year interest only payment is over, it then transitions to a 20-year fully amortizing payment. So that's really important if your borrower plans on keeping that loan, because at the end of the 10th year, their payment is going to go up considerably. It will be a fully amortizing 20-year loan. So in this case here, for our full doc primary non-QM option, our lowest cost option is 10.375, and you can buy that down all the way to 9.25%. I want to show you a little, put this all into context here. So now I basically ran the same scenario, but with the 40-year amortization option, which then makes this interest only for the first 10 years. And then at the end of the interest only period, it becomes a 30-year fully amortizing loan. So good rates as well. 10.375% is our lowest cost option, and 9.375 is our lowest rate option. And let me put the other one here a minute just so you can see the difference. So basically, to go from 30-year to 40-year, which is another consideration, right? Is the 40-year option is usually more expensive than the 30-year option. So here it is about what's that, point five. So you're at a half a point more expensive in cost to get the 40-year option, and also you may have a few less options depending also. So now we go from our full doc to our bank statement primary option. Now this one does go up to the max 85% LTV, which is the usual for our bank statement option. But look at those rates now. When we go to drop the LTV just a little bit and go bank statement, you're at 9.875, is almost at par at a 0.375% cost. And you can buy that down all the way to 7.75%. These are great rates for our bank statement interest only option with a 30-year amortization. And then same scenario now with a 40-year amortization. And you can see right then and there, right, rate went up. So we are, oops, sorry for that. We are at a little bit outlay there. 9.875 is our lowest cost option. And you can buy that down all the way to 8.375. And if we compare this to the 30-year option, just notice there now the 30-year option does start at 9.875, but goes all the way to 7.75%, whereas the 40-year option only goes down to 8.375%. So now we go to our investment options here. Interest only investment, full doc, 80% LTV, 40-year amortization. 7.375 is our lowest rate option. 8.75 is almost at par. So 8.75 at a 0.125 cost, and you can buy that down all the way to 7.375. So now I'll show you our 40-year amortization option here. So this one again was full doc. So this one, 85% LTV bank statement option. Non-QM loves those bank statement loans. 10.375 is our lowest cost option. 9.625 is our lowest rate option. So this is for our 40-year at 80%. And now we have, that was 85%. This one is 80% LTV, our 40-year amortization for bank statement. Always like to put these situations into context. I always like to show the lower LTV option so you could compare the costs, right? So here now, 8.999 actually has a lender credit, and you can buy that down all the way to 7.499 for 80% 40-year amortization. Remember, that's 10 years interest only, and then at the end of 10 years, it becomes a 30-year fully amortizing loan. And where would we be if I did not go over our DSCR options, right? Now, this one is for our 40-year option. Now, it is 80% LTV max for this option, or 85% LTV. DSCR options to basically the pricing is not compliant for interest only. So 9.125% is our lowest cost option at an 80% LTV, and you can buy that down all the way to 8.625 for our 40-year option. Now, again, the important thing on these loans is that most of these will allow you to qualify the borrower on the interest-only payment, which is great. So you can meet the DSCR of your loan. And then our last option here, I wanted to show the 30-year amortization option. So you'll note the rate does drop just a little bit. Here you're at 9% is your lowest cost option, and you can buy that down to 8.5% for your 30-year option, whereas your 40-year option is about a 0.125% in rate higher, and almost the same cost. So this one at 8.625, but we're going to compare apples to apples at 8.625. The 30-year option is costing 2.9 points, and 8.625 on the 40-year option is costing 3.15. So it's a difference of a 0.25% cost in fee difference between the 40 and the 30-year DSCR option. So remember, if you're having any issue with your qualifying the debt service coverage ratio, meeting whatever it may be for your program option, whether it's 1.0 or above or 1.25 or above, you can always go for the interest-only option, but just please make sure review the guidelines and make sure that that conduit does qualify the borrower based on the interest-only payment, because they all don't do that. It's one thing is the payment you can make, and the other thing is the payment that they're going to qualify the borrower on. Usually, it's the interest-only, but not always.
I think we'll go ahead and wrap it up. I don't see any other questions. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then we do a deep dive into a different topic. So we'll be back tomorrow with a new topic. We appreciate everybody tuning in. Thank you. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.